Hi, it's Shama, your tax goddess. So if you've seen my previous video on the RMD and some of the ticking time bombs that are waiting for you if all of your retirement is currently sitting in IRAs or 401ks, this is part 2 of that video series. So if you have not seen it, check the notes or check wherever. We'll have a link for the link to that video. Now, if you have, in our example, we had a couple who started at 40, they were, really doing a good job, throwing a bunch of money into their retirement. By the time they hit their 60s and 70s, they were looking at about an $11.3 million retirement account using some basic assumptions. That's in video 1. But video 2, so now we talked about in video 1, one of the ways to get out of this is a Roth conversion. Now, there are really some very specific windows in which a Roth conversion can be helpful, but you do need to actually look at it and run those calculations with your financial advisor and with your tax strategist to make sure that you're doing everything at the proper time so you're not giving yourself a hidden tax bomb that you weren't expecting, okay? So the first one here, if you are facing retirement tax bombs, and how do we get that? You're still in high incomes, you're still in a high marginal bracket. Typically, the last thing you want is a Roth conversion, but there are some very specific opportunities. So let's go through that. Now, the first window is going to be the years before enrolling in Medicare, okay? And it's very specific for that. Recall that Medicare means testing, which we covered a little bit in video number 1. Medicare means testing has a 2-year look-back period. So your income at age 63 impacts your Medicare Part B and D premiums when you're 65. So a prime window for doing Roth conversions is actually between retirement and age 62. Okay, so basically before your 2-year look-back period on your income. Now, if you do end up triggering Medicare testing while you do a Roth conversion, you may still find it's worthwhile, but definitely you can appeal the Medicare means testing surcharges, okay? That is done through form SSA-44, SSA-44 with the IRS. Now, one of the second Roth conversion windows is between retirement and when you start taking Social Security or pension income, at which point your income, of course, should be significantly higher. You may want to do a smaller Roth conversion. So this is an additional argument for, of course, deferring Social Security benefits for several years if you don't need them right away, okay? And the last window that you want to be looking at is until the RMDs begin at 72. So if you're still sitting on an RMD retirement tax bomb at this point, after 72, the conversion window has probably closed. So those 3 time brackets you want to be looking at with your tax strategist, with your CPA, what can you do? In what ways can you convert this? Now, of course, one of the other ways to do this is get your tax bracket down. As we talked about in the first video, open a business, open a side business, do some consulting, get some business expenses, use tax strategy to reduce your overall taxable income. Then we're not worried about doing Roth conversions, right? We can convert larger chunks of the retirement into Roth. So that's something certainly to consider. Another really good time to do a Roth conversion is when the markets are down. So now, just a little while ago, 3 months ago, 6 months ago, Google was trading at a significant premium over what it is right now. So if you have an account, let's say normally you have $500,000 of tax deferred assets and you do a $50,000 Roth conversion, you can eliminate 10% of that tax liability when the market is down. So if the market is now down by 20%, so your account value is $400,000 and you do a $50,000 Roth conversion, right? So the taxation would still be the same. It's still $50,000. The tax bill eliminates 12.5% of that tax liability instead of only 10%. So looking at your money and doing an assessment of your actual portfolio, what makes sense to convert to Roth when the markets are low is a great idea and a fantastic option. It's one of the things that at Tax Goddess, we really find it very important. We cannot really do tax strategy in a vacuum. We want to work with your financial advisor, with your CPA, if that's not us, with your portfolio manager, right? All of these things play together instead of just a one tunnel, only one thing, looking at one option, okay? So if you have any questions on how to diffuse the RMD retirement bomb and what kinds of things are actually coming at you as you start to get closer to retirement, what kind of things you can plan for now to prepare for retirement, we would love to chat with you. These are the types of strategies and specialty things that we do here at Tax Goddess. So just reach out to the team and we would love to chat with you, see how we can help you. So in the meantime, have a wonderful day and we'll talk to you later. All right, bye.